I think I should send flowers, gifts, and presents to all those professionals, I would say fake professionals out there, all those gurus of taxes in Italy, and those that keep on sharing advice online without basically almost zero experience on this matter. Or maybe they're so talented they did not need even to study on that. Even if I find them all very funny and their content very creative, I truly believe that wrong information can really lead people to bad places, to dark places, financially and personally. So I'm going to pick some of them and disassemble them all. I hear spending less than 150 days in Italy means you're not a tax resident. I wish it was true. The assumption based on the 150 days principle works on the domestic level, since more than 6 months applies according to the Italian tax code only. However, as you know, there are hundreds of tax treaties enforced between Italy and other countries all around the world that can qualify someone as a tax resident of our country regardless the time spent here. And all these rules work together with the so-called tiebreaker rules. Then I heard foreign income is not taxable if it's already taxed abroad. Sadly, in Italy, we have the worldwide taxation principle, and that means you're gonna be required to pay taxes in Italy no matter where the source of the money is, your income is, where your employer is, where your clients are. And at the same time, you're going to have to recap your foreign assets no matter where they are sitting. Well taxed, remember. I read somewhere that 100,000 flat tax regime applies to everyone moving to Italy. It's up to you. To my knowledge, this flat tax is convenient and profitable for real only if you're a high net worth individual. I mean, the 23 to 43% can show and bring to that result only if you're making more than 300,000 per year, if you know what I mean. And also, in order to qualify, you have to check your personal and financial information. And of course, it's not mandatory, but very useful. You should submit a ruling to the Agenzia delle Entrate to make sure you fit all the requirements. I read somewhere that Italy doesn't like to tax cryptocurrencies gains, 26% on capital gains. Yes, there is a tax-free area, a discount up to 2,000, but there is definitely the capital gain tax around the corner for you. I'm sorry. Oh, I love this one. Foreign pensions are tax-free in Italy. Well, some. I mean, there is a tax agreement in force detailing even how your foreign pension, private or public, can be considered tax exempt in Italy. But a couple of things I can share for sure. Dual citizenship is not a good deal for your government-driven pension. And if you receive Social Security from another country, well, maybe you have to pay your taxes in Italy only or first. I heard from someone that you can avoid Italian taxes by registering a company or a trust or a holding abroad. I'd rather not spend a word about this fake news since it's pretty nonsense to me. However, there are cases where really you can be the shareholder of the company without having to pay income taxes on the profits, but this would be considered an exemption. Generally speaking, if you have a business abroad, you're the director of the main shareholder, Italy is lining up for your taxes. Yes, they want a piece of the pie. Someone once asked me, rental income from foreign properties is not taxed in Italy. Is it true? No. Unfortunately, that is considered rental income. So if you're filing the modello redditi, the income tax firm in Italy, you have to file the RW framework for the wealth tax estimate, the property tax due on the property value, and the RL framework to see what the income tax rate is on the foreign income. What else? Oh, income from passive investments abroad is tax-free in Italy. Like cryptocurrencies, capital gain tax is due on Italian and foreign investment profits, such as interest, dividends. Paying 26% could be a bargain if you think about it, if you consider the highest bracket of 43% of all the income generated combined as an employee or business owner. What about there is no capital gain tax on the sale of foreign assets? Yes, there is one, 26%. Someone somewhere discussed about inheritance tax and gift taxes do not apply on foreign assets. This is a very good one. Yes and no. It really depends on where the inheritance asset is, where the properties are, where the equities or assets are coming from, and where the deceased was as a tax resident or before, passing away. On gifts, donations, well, no matter what or where the money is coming from, you must pay attention to the amount, the frequency, the use of the money, and most of all, the relationship between the donor and the beneficiary. Oh, I love this one, really do. Foreign trust beneficiaries do not pay taxes in Italy. It really depends on the trust itself. Generally speaking, the vast majority of the trusts out there do not pay taxes as separate entities. So even if you set up a trust in Panama or Singapore, thinking like, hey, I found a way to cheat Italian taxes, and you're an Italian tax resident of Italy, you owe taxes to every single dime you're getting from the trust if you're the beneficiary. The blessing and the curse of the Italian legislation is that we have thousands and thousands of domestic rules, ruling decisions, press releases that case by case can deny or allow a certain tax strategy or tax treatment. And on top of that, we must come up with international rules and agreements that can mitigate, push up or push down the rates account on the country of origin. Sometimes the internet is a nice play to have fun with, but not the best to take advice from. And I'm part of the community, so why should you trust me and my firm?